How is the market reacting to the blockade in the Strait of Hormuz? How do gas prices compare now to before the conflict? And have there been any additional LNG outages? And how are global events impacting power prices for UK businesses? Is there a cause for concern around storage levels? Are UK businesses changing their purchasing habits? Is the warmer weather having a positive impact on prices? What's the one thing businesses should keep an eye on as we move into May?
The one thing is...
So hi Emma, I hope you're doing well and thank you for joining me today to discuss the latest shifts within the energy market. It's certainly been an eventful Q1, but in all honesty, when do we ever have a quiet one in this industry? The hot topic that's ongoing is of course geopolitics and notably the conflict between the US and Iran. So my opening question to yourself, Emma, is because it has been so eventful, can you just give us a quick summary of what's been going on the past month?
Yeah, so one of the key updates from April was the ceasefire that was announced, the initial 10-day ceasefire between the US and Iran, and that was announced on the 8th of April and actually saw a downward movement of about 10% in the UK winter gas price. Another key update from this month was the ceasefire that was announced between Israel and Lebanon as well, and that update or that ceasefire in itself didn't necessarily have too much of a bearish impact on markets, but as a result of the ceasefire, Iran actually reopened the Strait of Hormuz for a limited period. About 20 vessels passed through the waterway, and we saw quite a significant downward push of prices off the back of that as well. That having been said, the blockade, both from the US point of view, the blockade on the Iranian ports and the blockade of the Strait of Hormuz by Iran are now back in place. So that reopening didn't actually last for too long.
So a lot of events unfolding, a lot of impactors that are affecting prices. Are you able to explain to me what the blockade is?
Yeah, so a blockade is essentially just a physical blocking of some form. So there are some mines laid in the Strait of Hormuz from the Iranian side at the moment, which means that vessels can't safely pass through that waterway. And there is a physical naval blockade in terms of US military vessels that are blocking any imports or exports from Iranian ports.
So if we look back at the conflict that happened last year, that was only for 12 days. This has, of course, been considerably longer. In regards to what effect that's had on gas prices at the start of or before the conflict arose to now, what is the difference and how are we looking?
Yeah, so if you compare, for example, markets when we spoke this time last month, prices are currently about 9% lower than that. So prices were trading over 120 pence per therm at the end of March and currently trading below 120 pence per therm. But if you compare that to pre-conflict, so the low prices that we saw at the beginning of the year in January, we're currently about 70% higher. We had seen prices as low as sort of 69 pence per therm on the winter contract. And like I say, we're sort of up above 110 pence per therm still.
And that update reflects the sentiment we're feeling with customers at the minute, especially those who are due for renewal this year, around obviously how steep prices are in comparison to last year. So we've discussed what's happening with LNG, of course, in the Qatari region, but looking at other gas-rich areas with LNG, how are their supplies being affected in regards to what's happening?
Yeah, so one positive update from this month is that a new facility in the US called Golden Pass actually exported their first ever LNG cargo, and that is currently on its way to be delivered in Belgium. And that is one of 3 production trains at that facility that are due to come online over the next few years. And there's other facilities in the US as well that are also due to come online in the next few years. So Corpus Christi, one of their sort of key facilities, is due for an expansion, as is the large Plaquemines facility, which is actually due to increase its production by over 60% over the next few years.
A disruption can create opportunity, and I think that's a prime example when it comes to the US at this point. But where there's opportunity for the US, and obviously the impact it's had negatively to Qatar, are there any other regions that are experiencing, I guess, similar negative sentiment as well?
There's been an unplanned outage at the Wheatstone LNG export facility in Australia this month, and that was because of damage caused by a cyclone. It's back fully online as of 23rd of April, but that was another disruption to supply from what is now the world's second largest exporter of LNG that wasn't really needed this month.
So turning our attention to power, how are these global events impacting electricity for UK consumers?
Yeah, so the electricity price is obviously driven by the gas price in part, because your gas price makes up part of the electricity price, both on the spot market but also on the forwards curve. So drivers that are pushing the gas price up, so geopolitics at the moment, are also having a direct impact on the power price as well.
We often look at European gas storage and the impact refilling stocks over the summer can have on prices. So what's the latest regarding that situation?
Yeah, so the current target for European gas storage this year to be filled by the end of summer is 80%, and that could be as low as 73%, depending on different sort of legislative decisions that are made. Currently, we are relatively on track to meet that 80% target. We have actually seen injections into storage over the last month or so, which is positive. But obviously, the longer we have a lack of Qatari LNG from the market and that limited supply, the less surplus we're going to have over the summer months to inject into storage. So that is going to add more and more pressure onto the storage picture the longer that the conflict in Iran goes on.
And yet another reason why the sooner this conflict ends, the better. And I guess on that note, it's a common question that we've brought up in our discussions, but ever the optimist, let's say the conflict was to end tomorrow. How long would it take for LNG supply chains to catch up and get back to the levels they once were at?
Yeah, so it's not as easy as just flicking a switch, turning production back on and restarting exports. So the LNG liquefaction facilities in Qatar would take about 2 to 3 weeks to actually start to be able to liquefy gas again. And then on top of that, it's another 2 to 3 weeks to actually begin production at what is their current capacity. So it's about 6 weeks from start to finish in terms of that process. And of course, it's worth noting or reminding people as well that Qatar are actually down about 17% of their production for the next 3 to 5 years due to the damage that's been caused by the conflict so far.
So I guess the message is it's certainly going to have a lasting impact regardless of when a resolution is reached. So focusing on the consumer, are you seeing any changes in behaviour due to these price rises, either with purchasing habits or reducing their demand?
A lot of our flexible portfolio have been able to avoid hedging at current levels and in current market conditions. However, the longer the conflict goes on, the more concerns are raised, of course, as to at what level a company is going to have to start hedging their exposure.
Yeah. And we're seeing exactly that with our mid-market customer base. However, in situations like this, you can always find opportunity. And I think from our product suite, such as multi-purchase, you are able to buy in and out of sequence and still find good prices given what's transpiring in the market. Now, it's been long overdue, but I'm sure we're all here for it. The recent sunny weather. My question to you, Emma, is what impact has that had on electricity output?
Yes, we have seen some really strong solar generation recently. On the 23rd of April, we actually saw 15 gig of solar generation for the first time ever in the UK. However, despite that, on the same day, we had pretty weak wind generation, and as a result, the day ahead power price, which is where your renewables tend to have the most impact, was still above £90 a megawatt hour. So whilst yes, we have seen some strong solar generation, unless we see strong sort of renewables across the board, it doesn't tend to have too much of an impact on those nearer term prices.
We keep hearing the same question from our customers around, if we're using so much wind, so much solar, why does my price still look like it's powered by gas? They are becoming increasingly aware of news reports about breaking the link between gas and renewables. So I guess the golden question is, when are we going to see the impact of that filter through to wholesale prices?
Yeah, so you're right. The government are putting forward a reform at the moment in terms of weakening that link between the gas and electricity prices in the UK. The current proposed measures show thought of a full reform of the system, so won't have any immediate impact on the wholesale gas or power price, but they are looking to change how about 30% of renewable generators are paid for the power that they produce. And that will be moving them onto a voluntary fixed term contract rather than the current market based pricing, which is, as you say, very heavily driven by geopolitics and the gas price. So added a bit more stability there.
So to wrap up and looking forward into May, what is the one thing you would advise consumers to keep an eye on when it comes to energy market drivers?
Yeah, I think unsurprisingly, it's going to be geopolitics again this month and looking for any developments with the conflict between the US and Iran. Sort of diplomatical efforts at the moment seem to have been stalled, which means that not a lot is happening and there's not too many news reports or headlines coming out about the conflict. But at the same time, we still have 20% less LNG available on the global market. The Strait of Hormuz is still closed to shipping. So it's going to keep driving our prices up unless there is a development in one way or another. So keeping an eye on geopolitics, whether or not there's an escalation in the conflict or when we're able to move somewhere close to a peace deal and a reopening of that waterway is going to be the key thing to look out for this month.
So thank you as always, Emma. It's been a pleasure to catch up, and the insight you've shared today is going to assist the sales teams and I greatly when guiding our customers. Thank you once again, and I look forward to catching up with you next month.